Hi friends, this is Ravi Kanth Miriyala. Right, my classes on CA final paper number 1 financial reporting are available on an academy platform. Yeah, these are recorded as well as live, and it is 100% comprehensive and 100% English batch, wherein we discussed each and every concept of Ind AS, which will be useful to the students even after qualification for practice purpose. Also, this will be useful. Yeah, please, inform your friends about this information. And on an academy platform, comprehensive batch on GFRS also is done. 23 classes, 69 hours, entire ICA material with PY examination questions and mock test papers also are covered in this discussion. It will be very much useful for CA final GFR, that is paper number 6E. Next, for my books, that is on Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikantmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from my quick revision fast track chart book on financial reporting, which is available in the market. Let's look at Ind AS 20, accounting for government grants. A government means any government, which is central government, state government, international government, or local government. Grants that can be termed as a subsidy or incentive, even duty drawback, is also government grant. Yeah, this standard does not deal with where the government has ownership, and it does not deal with the agriculture government grant accounting because it is dealt by Ind AS 41, and a government assistance which is in calculating the taxable profit. Yes, even that kind of government grant, no, not dealt by this standard. What is the government assistance? Government assistance is a government action to provide economic benefits, money or money's worth, to the specific qualified entity. What is a government grant? Government grant is government assistance by transfer of resources. There must be either cash transfer or kind transfer must be there. If there is no cash transfer or kind transfer, then it does not amount to be as a government grant. Yeah, that may be because to comply with the past or future compliance of conditions. Right. The examples, if you see carbon credits, yes, it's a government grant. Suppose I got one project which is in the public bidding, that government has not given me anything in kind or cash at free of cost or not at discounted prices. In bidding I got it. There is no government grant. Government gave me some free loan. Yes, it is a government grant because the interest free loan it is. Then obviously there is some economic benefit to me. There is a government grant. When to recognize government grant? You should recognize the government grant only when you satisfy two conditions. One is there should be reasonable assurance that the conditions will be satisfied, and there is no uncertainty with respect to ultimate receipt of the money or money's worth. Right, when you satisfy, reasonable assurance in the sense management should be confident enough that they will be able to satisfy the conditions. Right, suppose you received the money, but if the management is not confident, then you should not recognize that money, because it should be recognized because the company has to repay that money. It should be recognized as a repayable or payable to government. There is no concept of capital approach. Everything is revenue approach. Revenue approach in the sense, any money, any government grant has to be routed through profit and loss. It may happen in all of us. In 1 year it may happen, or it may happen in more than 1 year, depending upon the circumstance. Right, and when you are transferring it to profit and loss, it should be in systematic and rational approach. Systematic and rational with respect to profit and loss, it is only matching concept. That means you should transfer the government grant money. Income should be created to profit and loss in the ratio of the expenditure. Right, but there are two exceptions to this matching concept. One is government grant received in the current year for the previous year losses or previous year expenditure. Then I mean, there is no matching concept. It cannot be ensured. That's why it should be recognized in the current year immediately whenever you get that money. And second thing, second thing is government grant received in the current year for immediate financial support for the only our entity. Our entity is in financial troubles. That's why government has helped us, and this is received by only by our entity, no one else in the industry. Yes, under this circumstance also record it immediately. Obviously these things are little different. That's why our basic responsibility to disclose the information in this regard. Right, you received non-monetary government grant. Yes, that is, you received either land, machinery, something in kind, or some technology you received. Right, how can you recognize it? There are two ways that this is an accounting policy choice. One, I mean, you can recognize at a nominal value, which is rupee 1 or 10 or 100, something like that, or you can recognize it at fair market value. Yes, so under that circumstance, asset account debit to deferred government grant. Yes, this deferred government grant generally, I mean, the deferred government grant, you transfer it to profit and loss over the life of the asset. That makes more sense. Suppose if you say you received land, for land life is unlimited, correct? But when you have got the land, government must have kept a condition at least to construct a building. Then at least over the period life of the building, that's say 30-40 years, you should be transferring it to P&L, but don't transfer it immediately to profit and loss. It does not make any sense. Next, you received a government grant in cash. Then you should ask a question: is it related to depreciable asset, or is it related to non-depreciable asset? And the third one is it related to any expenditure? Yeah, power expenses, something like that. Right, if it is related to depreciable asset, there are two, I mean, you have two accounting policy choices. One, you can reduce that receipt of cash directly from the cost of the fixed, I mean, depreciable asset. Yeah, and the remaining amount should be depreciated over the remaining life of the asset. And the second thing is, you should recognize it as a DGG, that is, you received a cash account debit to DGG, and DGG will be transferred to P&L over the life of the asset in the ratio of the depreciation. If you are following SLM method, then equal amount of the DGG will be transferred to P&L. If you are following WDV or some other method, yes, you have to calculate literally, and in which ratio your depreciation comes in the same ratio it is supposed to be transferred to profit and loss. Yeah, and if you have received cash which is directly related to a non-depreciable asset, yeah, first you should ask a question. I mean, the situation is like this: you purchased a land for the purpose of you bought a land, for that government gave you some cash. What should I do? Yeah, so are there any conditions to be fulfilled? Because of the compliance of conditions, are we supposed to spend some money? If you say no, then directly you can transfer it to profit and loss immediately. No, if you say no, we have to fulfill some conditions for which we are going to spend some amount of money. Under that circumstance, then you transfer the amount received cash account debit to DGG account debit to P&L in the ratio of the expenditure you are supposed to transfer. And if it is directly related to any expenditure, if it is directly related to expenses, again there are two accounting policy choices are there. You can directly reduce it from the profit and, I mean, expenditure, respective expenditure, you can reduce it, or you can show it as a government grant income. Yes, that also, I mean, other income, government grant income, you can present it as an income. There is one possible, right? If it is interest free government grant, then what is the government grant amount? Actual money amount received minus fair value of the financial liability. That difference is going to be treated as government grant. Say we received cash account debit 100 to loan amount, let's say 90 rupees. 10 rupees is government grant. 10 rupees, what are you supposed to do, sir? I mean, where should I transfer? It depends why the loan has been given by the government to you. If the loan is given as an immediate financial relief, then immediately that amount, 10 rupees, will be transferred to profit and loss. If the loan has been given to train your employees for 4 years, then transfer it to the profit and loss over the period of 4 years in the ratio of your training expenditure. That means initially you will be transferring it to DGG, from DGG to P&L over the 4 years. Next, if it is related to, for it is for the purpose of funding a depreciable asset, then yes, then it can be reduced from the cost of the fixed asset, or it can be transferred to DGG, and from DGG it should be transferred to P&L over the life of the asset in the ratio of the depreciation, yeah, which is related to income, which we have discussed. And the last topic is refund of government grant. Refund of government grant is very simple. It is a reversal accounting. Because initially, if it has been transferred to credit to P&L, then you debit it to P&L. Now, initially, if it is been transferred to DGG and from there it has been transferred to P&L, then debit DGG now to the extent it is available in the balance sheet. Debit DGG to the extent available in the balance sheet. Right? Balancing number should be debited to P&L, and to cash whatever the amount you are actually refunding. If it was deducted from the fixed asset, yeah, what are we supposed to do? You have to debit to the fixed asset now, fixed asset account debit to cash. Not only that, you have to calculate retrospectively the depreciation as if the government grant had not been received by the company from the day 1 to till date, and charge this additional depreciation immediately. Right? If it is a cash flow presentation, yeah, you received a government grant is a funding activity, so it is supposed to be always financing activity. That is one. Next, you are not supposed to present it in the net basis. Okay, if it is in case of first adoption, it is a mandatory exemption. If generally you should, even though you received the government grant in the past, okay, suppose if your company has recorded as a capital reserve, now transfer it to your profit and loss, retained earnings go, you transfer it, right? Or if it is related to loans, government loan, yeah, if generally we should assume it date of transition is say 1/4/2020, 31st March 2020, what is the number? Same number should be taken for the date of transition, and assume that today only loan has been received from the government and the loan is for the remaining period. Now you are supposed to account it normally. That's it, my dear. If you like the video, please share this with your friends. Let that be useful to as many students as possible. Thank you and wish you the very best.